you. Hello everyone, good evening, and should I say, let me start that again, good afternoon. Welcome to today's Trading the Markets Live. Just looking at the euro dollar there, so let me just take a little step back. So today is Thursday the 26th of July. You're all very, very welcome indeed to join us this evening, this afternoon. I don't know why I'm obsessed with this evening. Maybe there's something great happening tonight, I don't know. So apologies for that. So welcome to Trading the Markets Live with the Live Trade Room. I'm a little bit distracted here because I'm kind of looking at multiple screens. I'm just conscious that there is an ECB press conference right now. We have Mario Draghi due to speak. Well, no, he's been speaking now for probably half an hour, and I think he's in his Q&A phase. So he makes a statement on behalf of the ECB, and then all the journalists start asking him a myriad of questions, and you can see the impact that it has on the market. So just before I share the charts with you, please do familiarise yourselves with the risks involved in trading these markets. Be aware of these risks at all times. Now, in addition, it's important to have a very brief understanding of the news flow. So I do just want to share with you ever so briefly Forex Factory, which is the major news for the day, without a shadow of a doubt, is the decision by the ECB to keep interest rates at zero. And basically the approach from Draghi and the ECB is very much steady as she goes. There's no need to change any element of their forward guidance effectively. And what I might do is I might play Mario Draghi very, very shortly, so you can get a little bit of feedback potentially on his position, and certainly the rhetoric and the talk. But what it has done from a price action perspective, as you can see, there's not an awful lot else to really consider. But when we flick over to the charts, what you can see up screen is a little bit of strengthening, a bit of dollar strength, which is looking at the euro dollar. We're seeing some strength in the US dollar, and we're seeing that across the board. We're seeing it strengthen against the pound dollar. Now, more recently, just a little bit of strength coming in off these lows against the yen. But when we go in and have a look into some detail, and when I bring up Draghi in a minute, you can see the volatility. To be fair, this isn't a significantly volatile event today. Just looking at the price action, we had a little bit of a, so if you can start at sort of 17.12, let's say that was the level at the point of Draghi sitting down for his press conference, and we had effectively a 20 pip move to the upside, and now we're around 20 pip move to the downside. So really we're talking about a 40 pip range over the course of his press conference, and that's not that significant. Normally you can get really volatile markets, but the basic position from the ECB is that they keep policy path to end bond purchases. So they're really they're just sticking to the guidance that they've already previously issued. So it was always going to be. Let's look at the euro dollar. I don't know if any of you guys are trading this market, but we weren't really interested yesterday in counter trending, but we are much more comfortable looking to sell this market and look for any opportunities to sell if we can get them. And today could present another opportunity for us to sell the euro dollar. Now what we'll do is we'll do some very, very quick analysis on this market. We've got a really significant low at this sort of level. So what we really are, from a high probability perspective, is look for an opportunity to sell around the 17.05 level. Now, in addition to that, we also can take note of these lows. So we might consider selling below the 16.92. Maybe we could have a 10 or 12 pip stop loss in this market if that is the case. So we'll keep a close eye on that one. So what we want to see is the market close, so we can and we'll just take a reduced risk on this trade. If we just get, so what we want to see when we identify these levels is to see if we get some continuation, and there's the continuation we're looking for. So we're getting a little bit of a push to the downside. Right, okay, so now we're actually able to get into that trade. We got in at 1688, and there is a bit of a structure just above the 1698, so there's a 10 pip stop loss. Now let's run with that, because this is a structural trade that we're expecting continuation to the downside. So let's just put it just above the 1700 level, and this is really effectively a we'll see if we can capitalize on a bit of a move to the downside in this market. And all we're simply doing is going with this more recent trend, which is a reversal from the highs and an extension further down to the downside. Let's see if we get that extended move further lower. Do let me know in the chat box, actually, guys, if there is any of you that are currently executing these trades. Hi, Corey. Good to have you with us. You're curious about the impact of the ECB announcement. We shall definitely look to have a quick look at that. We're effectively trading the price action. We're not necessarily listening to what Draghi has to say, but saying that, let's get this information up on the screen for you. So you should be able to hear this.
Mr. Schreurs?
Is that broadcasted, Rich?
My first one is also on
Can that be heard?
You stressed several times that you didn't discuss it today. In June, you said that you have to decide on that in the next couple of months.
There we go.
And again,
so what you're hearing
that,
is
the forward guidance would be the tool of choice for adjusting the monetary policy stance in the future. Does that mean if the outlook worsens,
so you're hearing the
especially on inflation, the preferred option would be to change the forward guidance on rates instead of changing the QE outlook, meaning extending QE again? Thank you.
Thank you. I'll answer the second question because the first question has a quick answer. We haven't discussed it. So, and we haven't discussed it even when to discuss it. But the second question is, as you've seen, as I've stressed in the last Riga Monetary Policy Council, all the statement, the introductory statement, all the formulation of all the monetary policy tools contain a repeated optionality and flexibility, putting the Governing Council in an ideal position to react to events. Some of these events are part of a foreseeable future based on the current set of information. Some other events may well not be foreseeable at the present.
Is they're going to stick with the current status quo in terms of their long-term views to increasing interest rates, and the views on their bond buying, the ending of the bond buying program. So so what we're interested in, of course, is the price action in this move. So we're getting a bit of a pullback off the low. That's not necessarily a major problem as such for us. what we want to do is to make sure that this pullback doesn't break this high. And now we see effectively, just have a listen to this actually just for a few seconds.
In the markets, this is how we shape up for you. Let's begin with the price action in the euro. Euro dollar shaping up as follows. In the FX market, euro was a little bit stronger as Mario Draghi showed a little bit more conviction around the inflation story. Then that quickly rolled over as he's pretty much said it's too early to declare victory. The euro softer here, down by a third of 1% at 116.92 amidst a...
Okay, so so we're seeing a bit of a softer euro dollar, as you can see, and that's what we're looking to sell. We're looking to sell this price, this market as a result. So we'll see how we get on with that trade. So just flicking through some of the remaining markets, we can see that the dollar's strengthening a little bit against the pound. We're getting to see this bit of strength, but this is clearly creating a bit of a low in and around these prices. So we're looking to get a bit of an extension to the upside on that market. The dollar Swiss, a little bit of indecision there over the last 3 or 4 days. So the other aspect of the news release is that the ECB are ready to adjust all instruments as and when required. So that's obviously quite interesting there. They're leaving the door open effectively, so it's not necessarily a success for the euro, which is why we're seeing the euro dollar just roll over to the downside. So we're seeing a bit of sideways moving price action enter the dollar Swiss. So this is what we want to see. We want to see the pullback. We want to see a bit of don't forget, we're only trading at a 1 minute time frame, and we got into this pretty quickly. So we're seeing the pullback. We have to experience that. We get a rollover to the downside, and if we break this low, then we're going to continue in this market, and we can take a bit of risk off the table as a result, because this can become our new structural high. However, so if we get the move lower and it fails at these lows, and we start getting a structural failure to the upside, then we can act accordingly again to try and mitigate that risk wherever possible. So that's the euro dollar. So going on to the dollar CAD, we're seeing a bit of strength come back in off yesterday's really strong sell-off, but we are actually currently below this structural level. So it doesn't stack up from us from a high probability perspective to be looking to buy the dollar CAD. There's definitely a few other better opportunities to focus on. We're seeing a complete reversal on yesterday's move in the Aussie dollar. Yes, we do prefer to sell this market if we could. We want to go with the recent trend to the downside. The problem we have is we've clearly been in a consolidated phase now for a good few weeks. So that's been clearly moving sideways. So moving on then to the New Zealand dollar. And what I'll do is I'll flick back to this just to see how we're getting on. So this price is really just hanging around the 16.95 level. So we want to see what the next move is for the euro dollar. Looking at the New Zealand dollar, we're getting a bit of a similar situation really to the Aussie dollar. So we would prefer to look for opportunities to sell this market, but a lot of the move has already occurred. In a second, what I might do is have a quick look at something which is called the ATR, the average true range, and you can see you'll be able to see the potential growth of that market to the downside, and what sort of range we're likely to see over that period. So I will come back to that very shortly if that's okay. Let's flip through some of the other markets. We're currently trading inside yesterday's range of highs and lows, so that doesn't really give us the high probability we're looking for. Similar situation, although we're selling off these highs, and we had a bit of a positive price action come in yesterday, and we've had a bit of selling as a result today. Not much happening in the Swiss yen as things stand. The pound yen is just retracing, still within yesterday's highs and lows. It's retracing there, so a little bit of consolidation just kicking in around these levels. The gold market is just retracing a little bit off these highs, so this is a market that we can certainly have a look at. So I'll come back to this market shortly, and we can identify a couple of key levels really to focus on for the session. So we'll get this up on screen so you can see it. And to just finish off some of the other markets, we do like the US oil market above 70.30, but as you can see, we're currently at the 69.85 level. Now it's the US equities that have been interesting. The Dow Jones is making new all-time highs. No, sorry, this is the this is the Dow Jones. Okay, so sorry, let me zoom in. So we are just off these all-time highs. It was the yesterday's high in the Nasdaq, which was obviously what was an all-time high. So we're getting these markets at slightly different phases, and expect continuation really in this market to the upside. So we can certainly have a look at the Dow Jones, except there's a because I suppose effectively when we look at the global indices, we're looking for a risk on versus risk off approach, and we're just getting contradicting indications through when we look at like the FTSE, for example. We're getting this bit of selling coming into that market. So just because of that, perhaps now it's not such the high probability that we look for. So what we'll continue to do is I'll tell you what, we'll look at the gold market. We'll split the screen in half. We'll put the gold market on the right of your screen, and we'll put our euro dollar on the left hand side here, so you can clearly see these two markets. And so now we've technically kind of still got this this pullback off the lows. So this level in here clearly hasn't stood up, so it's actually bounced back to the 1700 level, which is the only reason why I put our stop loss just above that at the 1701 level. And we'd expect this market to continue to the downside. Now sometimes you might have the correct analysis, but potentially the wrong timing. So we can continue to look for it beyond, irrespective of the outcome of this one trade. So we're quite happy to risk our 10-12 pips on that trade. So double bottom. Do let me know, guys, as well, if there's any markets that you happen to be looking at, or you happen to be watching, or if there's any markets that you'd like us to have a quick look at. Do post whatever markets you are trading into the chat box, and I'll be more than happy to have a look at those. We have had market conditions which have been a little bit choppy, not great setups really over the last week, and those are the market conditions in which we trade. So we have to trade what we see. So that is the nature of a trader's approach to these markets. So for example, like if we do get a winner out of this, we won't necessarily be hanging around for a long period of time. So I was suggesting earlier about the situation with the New Zealand dollar, which is looking at the range, which is the difference from high to low. Now what I'm going to do is I'm going to do the same thing, but I'm effectively going to do it with the euro dollar. So let's look at it on a time frame. So really what we want to do is to assess what's the likeliest outcome of a positive outcome in this trade. And one way to help us with that is to use what's called an average true range. Now you can use a 20 period average true range, and what that will do simply is it will give you a little chart at the bottom of your perhaps your MetaTrader 4 screen, and it will tell you over the last 20 periods. So for this time frame, we're looking at daily time frame. So over the last 20 days, we can see that the average range from high to low is 76 pips. Now that's quite significant, because we'll take a look at today's candlestick, and we can see that the high is the 117.43 just at the bottom left hand corner of the screen there, and the low is the 16.85. So what that means is today's range from high to low is a total of 58 pips. So with an average true range of 76 pips, there's the likelihood of you getting potentially a 15 to maybe 20 pip winner is certainly in keeping with the average true range, and that's where our expectations will be in line. So if we get a 10 or 15 or 20 pip winner in this market, we'll look to take profit off, and if it shows signs of it returning and pulling back, we'll definitely look to get out of those trades sooner rather than later. So we can then now look at this market and expect that actually we're trading this market in the right direction. We do want to be going with the market, looking to sell this market to the downside, and a lot of Draghi's comments are kind of supportive of that. Now, it's not to suggest that we won't get an intraday reversal. We very well may do. We're just exposing 10 or 12 pips in this trade. So that's our entry price. We did want to get into this market a little bit earlier, just below the 16.92, but we executed the trade just at this slightly lower price, a couple of pips below. So now we really want to see how much momentum is in this market. Of course, we want this market to continue to the downside, and that's very much the case. It's very, very possible indeed for us. So I'm just going to get up my pen. Hi Mike, you just said, can we please look at the DAX? Yeah, we absolutely can. Good to see you again. Mike, do you mind me asking, are you in any trades today? Is there anything that you have had the pleasure to trade? If so, do let me know. And obviously I appreciate market conditions have been a little bit choppy going into the ECB, so it's understandable if you haven't, but just let me know if you happen to be in any trades or not. So so what I wanted to do was to just get up the pen up on screen. So we've clearly created a low in this market. Now we've pulled back in line with these levels, and we have our stop loss just above that level. So if we get this extension lower and then we get a strong reversal, then we don't want to be in this trade to the upside, because we're just likely to get a bit of a stronger pullback. However, we've got this little low sitting in here, so if the price actually procrastinates and start to moving lower, then that's exactly what we want to see. So it's in keeping with our opinions, and it's just creeping lower now as we look at this chart. So that is effectively what we want to see, and what we want to guard ourselves against is if this market actually fails to break this low, because this would be continuation to the downside. It will be all systems go to stay in this trade. However, if we get this market edging lower and then we get kind of the reversal signal, then of course we kind of want to be out at that point, because we're very likely to get a little bit of a pulse to the upside. So we want to be careful about the structural failure, it's called, where the market fails to make a new low and you get that sort of strong reversal price action to the upside. So that's what we're going to try to guard ourselves against. But because we trade with stop losses every time when we enter these markets, we're only prepared to expose just a certain amount of our capital, and we look to trade smaller percentages of our capital. And we're talking about effectively 1 to 2%. Occasionally, if we get a really strong move, then or a bit of a no-brainer trade, then of course we can increase the risk, but it's kind of done on an ad hoc basis. So so Mike, you're suggesting you're currently selling the dollar yen. Okay, that was an interesting market. I wonder, Mike, were you selling below the daily low, or what type of trade, perhaps even the entry price that you were able to enter at? I mean, to be fair, it's not a trade that we would ordinarily look to take, but it is below the 111.11 or the 11100, which would stack the odds in your favor for this market. So so we can keep a bit of an eye on that one. So we're wanting to see this extension low. We want to see these lows be broken to the downside, and this is hopefully just trading the structures in these markets. And we want to see a breakout, ideally, like if the dollar's strengthening a little bit across the board, we want to see the gold market just roll over below the 1226.77, and we might look to capitalize on that market to the downside. So so what I'm going to do is I'm now going to just take note of these intraday levels, because these are now really important for us. We want to see a break of the 1685 to the downside, and if we do, then, well, as you can see, the pullback literally got very close to our stop loss, but we just had it just outside the 1700 level, because it's a strong psychological level, the 1700. So we really want to see this market now break down through the 1685, maybe down to something like the 1670 level, and we'll look to perhaps take profit on that trade, certainly if it looks like the market is going to turn around and reverse. So let's see. So there we get the move through those levels. So now we want to see the close down at this level, and we want to see just some continuation. So there we go, we get the close below that level. So so now we can continue to trade the structure. We'll hopefully get a break through this 1680 level to the downside, and we'll be able to book in some profit on that trade. Not much is really happening, as you can see, in the gold market. So now just a little bit of patience is really required. I see, Mike. Okay, so you see you got into the dollar yen around 110.97. So okay, you're very close then to these levels, and so you sold the market below the 11100, which is preferable. So that's good, and you're now just getting a bit of a pullback. So if we look at this, there is potential resistance around here. So I mean, you know yourself, Mike, but just obviously just we've got a series of structural failures now, and we're seeing a bit of dollar strength come into the market. So just protect your position potentially. Of course, if you're only a few pips above your entry, so you may consider getting out of that trade, but I'll very much leave that down to yourself. I would certainly consider just taking a small loss on that trade if you find it pulling against you. So so we're getting the move that we were looking for. So now what we want to do is just focus on trading the structure in this market. So we're getting this price action really close now, down to the 1673. We're getting the gold market weakening, which is what we'd want to see. We're getting some dollar strength coming in across these markets, as you can see. So this could actually be very close, Mike, to actually giving us an opportunity to buy this market. So do be aware of that. Yep, so we're clearly getting some dollar strength coming into these markets, and these markets are extending lower. So that is the move really for the afternoon, and we're getting extension down to these lows. So the first opportunity we get to perhaps take risk off the table and potentially even book in a bit of profit in this trade, we will definitely look to take that. So we've just got to manage this trade now and see what the market decides to do next. We might get a little bit of a pullback, a little bit of a pause. So we had the gold market just reject these lows, the 1226 level. We've seen a little bit of a rejection now in this market, so so that's worth taking note of. Okay, so we didn't really have much opportunity for the majority of the day, but now it just looks like the opportunities. Certainly, we're seeing a bit of dollar strength actually come into the market. So it'll be interesting to see how long this will last for. Now, what we're interested in is trading the structures now. So what I mean by that is when we got into this breakout trade to the downside, we placed our stop loss above the structure. The market pulled back to that level and then rolled over subsequently to the downside. So this is sort of really what we want to see, and this allows us to really let our winners run. Like, even if this market came back to this level, it still potentially gives us more scope to the downside. It's kind of a natural movement in this market to pull back, like we've seen here, before you get that nice move to the downside, and then you get the same bit of price action keep reoccurring. So whatever level this market creates, we'll look to take risk off the table and just sort of interact nice and calmly with these markets and just allow the price action to unfold. And there's no need for any sort of panic of any kind. Let the market create a bit of a structure, and then we can make a decision. Okay. So like I said, the level that we would expect this market to pull back to is a previous level of support, which then becomes resistance around the 1685. So let's see if this creates a structure for us. We kind of want to see rejections now around this sort of price, and then that is another thing that just we can tick off and say, right, well, it's still performing as we want it to, so we'll let it go. There's no need to be too and these are all of the skills that a lot of sort of new and inexperienced traders really struggle with, is knowing when to obviously get out of those trades, and sometimes we let these structures unfold, and we'll be in it for as long as we need to be, and then of course on other occasions we need to use a significant amount of discretion. And I suppose that is ultimately the most difficult part for traders, is knowing when the market conditions are favorable and then knowing when they are not so favorable, and that's really the tough part of trade. How you negotiate these markets, it's all about decision making, and the more consistent you are in that approach, we think the better you'll become. So we're currently getting the strong pullback in the euro dollar, and when I say strong, I don't mean strong, I just mean a natural pullback. And look, you can look at the highs and the lows, and you can gauge that distance, and it's funny how this market behaves like that. They're kind of similar pullbacks, similar distances. Now, but the important thing that we need to see is a break beneath the low. So if we get this market coming lower and then we get a structural failure, then that for us is a warning sign to get out. So let's see if we do get that little bit of a pulse lower. Okay. So it wasn't happy until this market actually virtually bounced off the 1685 to the downside. So let's keep monitoring this trade, and we'll see what this market wants to do next, and then we can make decisions accordingly. Then, can I ask anyone currently online with us? Perhaps have you taken any trades today? If you have, please do let us know. Just put it into your chat box. My pleasure, Mike. So when we look at this euro dollar, we do want to see the impulse to the downside, because as it stands, it doesn't look like we're getting that impulse to the downside. So the strength in the dollar just seems to be evaporating a little bit. They're all coming off their highs now. Okay, interesting. So we're clearly getting some consolidation around these levels. So we're just watching them carefully. You see, if this consolidation goes on for a prolonged period, then it can actually become a bit of a floor in the market. So let's see what price does. We'll continue to monitor it closely. So with our trade plan, the trade we were looking to take would have been a close below the 12.2677 level, and as you can see, we're kind of reversing those levels, and we're actually threatening to push higher. And we're still in a bit of profit in the euro dollar trade. So the first thing we want this market to do is to break beneath that low or close beneath it, and then that will at least cause a bit of a structure below that current price. So hopefully we'll get that move now as things are unfold. There's a bit of volatility in there, isn't there? There's a bit of erratic price action kicking in. And now we're getting that close. So far so good. What this has done now is we've broken lower, so this high now becomes quite significant to us. So all we're simply going to do with this market is bring down our stop loss to break even. So what we're doing straight away is we're taking the risk off this particular trade. So we'll bring it down, even book in a small little bit of profit on that trade, with the expectation. So now we're trading the structures. We had previously had our stop loss just above this level, and now we've got our stop loss above this level. And if the market continues further to the downside, then great, we can continue to work with that from a price action perspective. And if it reverses or turns around, then we'll have at least booked in a little bit of profit on the trade. And we're still within this range. If you're looking at the gold market on the right hand side, we're still very much range bound. Yes, we are getting these spikes to the upside and to the downside, but erratic price action for us, not we're not fans of that kind of price movement. So we prefer to trade more stable conditions if we possibly can. So we are getting this little move lower now. So there's only less than a pip difference with our euro dollar pair. So now we literally just got to be a little bit patient with this market, really. We've got our stop loss in place. We've been able to navigate the price action till now. So now let's see what's in store for this market. In the meantime, we might have a quick look. So what I shall do is I'll put in another low in this market. So we want to see if price comes back down to this level. If it fails to break below the 1672, we might look to take profit around these levels. If it breaks through and we close below, then we might stick with it. So we're just going to allow the market to determine what it wants us to do. Indicators. So I'll take off the average true range just from the bottom of that screen. Just makes the price action a little bit bigger. So this is what we're effectively guarding ourselves against with our stop loss, is the pullback, the attempt to make a new low which fails, and then this market to actually break this level to the upside. So if that happens, we're effectively out of this trade, but what we want to see is this market continue to just squeeze to the downside. So we're prepared for both eventualities. Obviously we want it to move lower. So I suppose the important part of trading is just practicing that consistency, practicing getting the elements right. The identification of that trade needs to be important. Now we saw what was going on with the euro dollar on a daily time frame. We wanted to trade with the market, so we understood the market conditions, and it became a bit of a, once the market suddenly turned around from pushing higher when Draghi sat down to start talking, it then started to move on its merry way to the downside. So you had a little bit of reassurance, and it revealed itself to us as a trading opportunity. So we were able to identify a decent setup, potentially a high probability setup. That's all we were trading. And the execution side of it, we wanted to capitalize on the breakout of a previous level. So we identified this low initially. We got into it a little bit lower, a couple of pips lower, but we had to experience the pullback to the upside. Yeah, we had to experience this little pullback and get this extension to the downside. So that's what we were looking to trade, and that's exactly what we got. Now we've got this new structure, and the 1685 is very, very important. So if we get a structural failure back to the upside from this level, then we're going to be out of this trade, and we'll book in just a small bit of profit on it. And the reason why we like working with support and resistance and these structures is because they stack up for us over the medium and longer term. So just to expand, every trending upward moving market works in this way to varying degrees, and every downtrending market works in exactly the opposite way. So it's really learning and understanding these structures and looking to time your entries to the upside and also time your entries to the downside. So that's really what's quite important. So yeah, the execution of our trade was very, very important. We needed to I mean, I know I said that I got into this market just a couple of pips too late, but that was just because of this trading platform. And then we got the extended move to the downside. So next is about your process of managing the trade. So so then that becomes quite important. We were able to mitigate risk as the market moved in our favor, and we would continue to do so as well if it extended further to the downside. We're now experiencing, if this market closes above that level, the 1685, then this is now technically a structural failure. So That's obviously not what we wanted, but we have taken risk off the table and actually booked in a bit of profit on that move. So the last candlestick is not what we wanted to see. Let's see if we get a rejection off that level or not. So we are getting a little bit of a rejection of this level now. So as these markets keep evolving, we can keep adapting our approach. So is this level likely to provide a little bit of support around this level? And we don't know. Are we on the verge of a reversal in this market where we're starting to move into a bit of an uptrend? If there's a bit of weakness coming into the dollar now, let's have a look at the other markets and see if we can formulate a picture. So the pound dollar, we pulled back a little bit off the lows, but we've been doing that across many of these markets. The dollar hasn't really done much against the yen. Neither, in fact, the dollar sold off a little bit against the Swiss franc. Same situation for the dollar CAD. Now the dollar is still quite strong against the Aussie and the New Zealand, although they haven't really moved an awful lot. And the yen pairs, so the yen is still threatening a little bit of strength. We're still struggling. We're still seeing these rejections on the 15-minute time frame, and nothing really happening with US oil either. So maybe the euro dollar is formulating a little bit of a double top, a bit of price action. So maybe we're going to see a double top in this market. Now this is still a bit of a concern to the upside, that particular market, from a technical perspective. Now what we want to see is a break of this level now to the downside, and then that constitutes actually quite a bit of bearish price action there in the euro dollar. So let's see if we do get that flush lower. So there we go, we get that. So we'd like to see the close and see if this market edges to create potentially even the double bottom. Here we currently have a double top, and so now it looks like we're getting that close in this market. So we definitely want to continue to sell the euro dollar for the short term. Let's have a look at potential take profit levels. So you'd have to say, if we don't get a break below the 1672, in keeping with our assessment of our average true range in the euro dollar, then we will we'll have to maybe just take profit on the trade. So we're getting a bit of a rejection of this level. So if we get a little bit of a push higher and then we get a rollover back to 1672, we'll book in more profit on this trade. But really, if we struggle to break below the 1672, we might look to take profit around that level. It just seems to sort of stack up and make a little bit of sense. So it would still constitute a 15 pip winner, which would be fine for us under the circumstances today. So if you don't already have your stop loss moved, then really do consider it, because for us this is a really strong reversal signal this high up here. I know we've got our stop loss just above it, but it's a really important level. So it would be a rejection of these lows, and it could be the start as well of perhaps a prolonged period of consolidation. So then you want to consider whether it's worth sticking with this trade and committing the time and resources to it, or whether you want to, if you wanted to take up profit on the trade, that's absolutely fine. Every profitable trade is a great trade, don't forget. So so we'll see how we get on with this. Listen, I'm just very conscious of the time, guys. So we're actually due to start our the second part of this this trade room through the live trade room. So we're currently offering, if you look just below, you'll see some information, and we're offering you guys an opportunity to join us completely free of charge for 14 days to join all of our live trade rooms, and you have up to 5 live trade rooms. So you can join us for that. The link is below, yeah, I suppose you've got nothing to lose. So look, we'll hopefully see you guys on the inside through the live trade room to continue our trading for the day. So we'll but we do for now expect the euro dollar to continue lower, but if we get a structural failure above the 1685, then of course we no longer want to be looking for opportunities to sell if that happens. So so keep an eye on that. So I'll let you guys go for the afternoon. Those of you that want to join us over on the live trade room, please do just click the link below in the description, and we'll look forward to seeing you through the live trade room. So from everyone here, do take care, and we shall speak to you very, very soon. If you would like to connect with us, just before I let you go, do subscribe, do click the YouTube subscription button below, and there's also updates as well on like our daily trade watch and things like that, so you'll find some useful content being posted on YouTube. Also follow us on Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So as always, thank you very much indeed for joining us. Do take care, and we shall look forward to seeing you all next time. For everyone here, take care and bye for now.